Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Out of Europe, we got current account balance came in at a negative 26 billion, expected to be a negative 21 billion. So higher than expected on that deficit is not a good thing. Also, Great Britain came in with final GDP in line with expectations at 0.6%, expected to be 0.6%. And then we also got the revised business sentiment came in at negative 1.1%, expected to be negative 1.2%. Out of Canada, I don't usually talk about Canada, but some of these numbers are really significant in and around the holiday season. So let's hit those. We got core retail sales, which strips out some of the more volatile aspects of that number, being transportation, cars, automobiles, and airplanes, things like that. Things that you're going to have a more cyclical pattern for those type of automobiles and transportation items. And then GDP came in at 0.3%, expected to be 0.2%, so better than expected there. That's a good thing. And finally, just retail sales, including those automobiles and transportation items, came in at 0.3%, expected to be 0.4%, and they revised the last month's number slightly down from 0.2% to 0.1%. So not looking real great on the retail sales, especially out of Canada, and not so great across the pond either. And then back here in the United States, we got our own core durable goods orders, and that came in at a negative 0.3%, expected to be a positive 0.3%. So a big miss there. Final GDP came in at 3.4%, expected to be 3.5%. Durable goods came in at 0.8%, expected to be 1.6%, so half of what was expected there. Not a good thing. Final GDP prices paid came in at 1.8%, expected to be 1.7%, so we're seeing prices increase. We got consumer confidence out of Europe. I don't know why that one's out of line, but it is. Came in at -6 and expected to be -4. Back to the United States again, we got our core personal consumption expenditures, which is PCE price index, came in at 0.1%, expected to be 0.2%. Lower is worse. And then we got personal spending came in better than expected at 0.4%, but we saw personal income drop to 0.2%. So that has to lead us to believe that people are buying stuff on credit right now, and that does not bode well for a robust economy. All right, that's about it, other than final revised University of Michigan inflation expectations came in at 2.7%. All right, on to the overall markets. We've got crude oil trying to find a bottom here, trading around $45 a barrel. It is right on the 23 Fibonacci level. We've settled above that 3 times in a row. Today we've broken through it though. But the way that the chart sets up right now, if we settle here or just slightly higher, that's going to look like a very nice bottom in crude oil. So that might be the time to start stepping in to the upside in the black gold. And then we got gold futures. They are coming off a little bit today. We aren't seeing any real robustness out of the equities. It's a pretty quiet day. We'll talk about that a little bit more. But yesterday, you can see with that late day that I was talking about, late in the day, we're really seeing this heavy selling coming into the markets, which is not a good sign if you are a bull. It is very bearish, and that's why we saw that real big spike yesterday in gold futures as people, put their money somewhere safe, and gold is considered one of those safe havens, especially when markets are in turmoil. So gold giving up a little bit of ground, probably more profit taking than anything. If we look at Bitcoin, it is trying to move higher. It's up about $25 now. Last 3 days in a row, big moves higher, trying to test that 4,000 mark. We did print it, I think, yesterday for a brief moment. Today, not really getting to that level, just quite yet. Let's just take a look at it. I think the high today was just inside that 4,000. So it is trying to claw its way back into that handle. So bonds completely unchanged right now as we speak, just upticked one tick. Yesterday, big sell-off in bonds. There's a lot of sentiment out there that the Fed, although they have signaled that they are going to raise rates 2 more times in 2019, that is probably going to start teetering a little bit. I don't think that we're going to see any increases, especially with the economic data that we've been getting. And, you know, the Fed actually had this data that they could have looked at. They can get these data points early. Where we have to wait for them, they can request them anytime they want, as long as it's within a week of that meeting. I don't know why they didn't look at those. Then we've got the VIX. It is off by about 1.5 points today. The overall markets aren't rallying, which is what we would usually see as a push down in the VIX, but it's a pretty quiet day, and that's what's really kind of settling this market down. As you can see here, this is what I was talking about, pretty much an inside day with the Dow Jones Industrial Average. It's up 100 points right now. That we'll have to wait to see what happens late in the day. I'd like to see this make a new bottom and then create like an inverted hammer here, which would signal that there is some support there. Then we have the E-mini S&Ps. I went straight to the E-mini S&Ps because for some reason my Nasdaq chart was giving me fits earlier. So let me just pull the Nasdaq up over here. And you can see Nasdaq is in negative territory while the Dow is in positive territory. This is going to be a theme here where we're seeing tech slide, especially if the economy is not doing that well. And people are going to also not only put their money in gold, but they're going to go to the blue chip stocks, which is really where lies in the Dow. So the Dow making that move higher could just be a cyclical rotation out of some of the more volatile stocks like tech and then into the blue chip stocks, which are in the Dow. So that's what I think we're seeing right now. You can see the Dow was positive. We're seeing the negative in the Nasdaq and the E-mini S&Ps here. Again, yesterday it made it look like we were going to create a nice little bottom here. Today's market action just not giving any type of confirmation to any type of bottom at this point. We can look at it on the daily chart. This is a 30-minute bar chart or candlestick chart actually, with the blue sections being an individual day. We have the day and the overnight session in there. This is what I'm talking about. Late in the day, we're just seeing these massive sell-offs. Today, inside day, you can see the value areas are within yesterday's, so it's not a whole lot of directional bias going on right now. And then that's about it. I haven't done anything in Microsoft or anything else across the board. I'm really waiting for these markets to kind of give me a signal if we're going to continue down to start adding some shorts or if we're finding a bottom in order to play it to the upside. I haven't found anything in these charts that leads me to believe that we are going to go one way or the other. So I am going to stay on the sidelines until I get a better feel for that. And that's about it for today. Check out yesterday's webinar. It is on the long put calendar. It's great for this type of market setup. Right now we have really high implied volatility in the front months and the back months are actually lower. So it is an opportunity to sell high volatility in these front months and then buy some low volatility in those back months. And I talk about all the levers and pulleys in that webinar. So go check it out at protraderstrategies.com. That's all I got for you. Have a great weekend. And if you can't take that, take it easy.